Now, some drama in the hedge fund world today. Goldman Sachs pulling $120 million from Phil Falcone's main hedge fund. At issue, lagging returns and a $113 million loan that Falcone took from one of his smaller funds that had suspended redemptions by investors. Our next guest knows the players involved here. He's Todd Harrison, founder and chief executive of Minyanville Media. Todd was a partner at Kramer Berkowitz and also has spent time at the Galleon Group as well as Morgan Stanley. Todd, good to have you with us. And I got to say, there was an article this September the 20th edition of Bloomberg Business Week about Phil Falcone and his wife Lisa and some of the charitable donations that they've made and the causes they support. But they didn't talk about the fact that they borrowed money to pay their personal taxes. They borrowed money from their own hedge funds. Is that normal?
Well, okay, so it's normal in the hedge fund community to see this. The language of the charter sometimes allows for these hedge funds to gate their funds or to not allow investors to redeem monies.
Right, you can't get your money out.
And that's a whole nother a whole nother ball of wax.
Right, that's not I'm not talking about being able to get your money out or having to be able to sort of only get out a certain portion of your investment every quarter.
Right. Well, what's interesting to me is when I first read this on Bloomberg, my nose scrunched because of the personal loan against a gated fund. That was a little bit unethical to me, but what was interesting to me was that this was disclosed in March. So presumably Goldman Sachs and other investors knew about this in March. It's now November. So I don't think it's as much that he borrowed money against it. That's a stinky fish of another sort. But I think it's more Goldman Sachs is rotating risk, perhaps. The old adage on Wall Street is you're only as good as your last trade. I believe his main fund is down some. So this could be a classic case of rotating risk on behalf of Goldman. And as they are widely considered the smartest guys in the room, I think the risk for Falcone right now is that others may follow Goldman's lead.
All right, I hate to stay with the stinking fish for just a minute, but I just want to understand this. You have a hedge fund which has money that has been deposited by investors, in this case Goldman Sachs and presumably other investors, and they sign various documents that allow you to do certain things with that money. And that money is held by a fiduciary, some third party. And does that fiduciary then have to agree to allow that money to be lent back to the manager of the fund for something like personal taxes?
Well, the answer is I don't know.
Have you ever experienced anything like that?
I never have, nor have I been in this situation. Not just a situation from a hedge fund specific standpoint, but in a macro situation. I know folks who were very good at what they do in the hedge fund community that had compounded double-digit returns that on their face would not gate their fund because they didn't think ethically that was the right thing to do, and they were punished for it because the fund of funds came and they raided their fund because it was the only source of liquidity.
Sure, I remember Leon Cooperman of Omega, for example. I mean, he decided that, okay, if people want to withdraw their money, let them withdraw their money. This is the way it goes.
Right, and so I can't speak to that because I don't know the specifics, but presumably there would be language that would allow them to gate the fund, dipping into that fund for personal tax, to cover your personal tax. That's a whole other issue. But I think
it's not a bank. It's not like you're getting a loan from a bank. I mean, what would you use for collateral?
And it's just not fair. If you're an investor and you have if I was an investor in his fund and I heard this, I'd be pissed off always till Sunday, but I'm not, so I'm not. So it remains to be seen who's going to follow Goldman's steps in terms of redemptions at 25% per quarter going forward.
Todd Harrison, appreciate you coming by such short notice, the chief executive and founder of Minyanville Media. Appreciate it.